You missed the signals in 2025. While everyone was glued to Bitcoin charts and chasing meme coin hype, the real money quietly rotated elsewhere. Smart capital wasn't loud, it wasn't trending, it was flowing into hard assets, real industries, and sectors tied to global power shifts. Gold surged, rare earths rallied, energy stocks climbed, resource companies printed gains, and most retail investors, they didn't even notice. That's the lesson: markets reward attention, not hype. Now we're in 2026. The question isn't what already ran. The question is, where is capital staying? Because the biggest profits don't come from catching a trend late. They come from identifying where institutional money is parking long-term. Here are the sectors leading capital rotation right now, and why they matter. First, commodities and precious metals. Central banks worldwide have been stockpiling gold at record levels. Why? Currency hedging, geopolitical tension, and long-term inflation protection. When governments buy gold, that's not speculation, that's strategy. Stocks benefiting: Sanu Gold, Luca Mining, Avino, Silver and Gold, NGX and Denison Mines. Second, critical minerals and rare earths. AI, EVs, defense systems, and energy grids all rely on lithium, copper, nickel, and rare earth elements. Supply is tight. Demand is locked in for a decade. Smart money is positioning early. Stocks to watch: MP Materials, Talon Metals, Surge Battery, Lithium Americas. Third, energy, especially oil, LNG, and uranium. Despite the green narrative, the world still runs on energy density. Developing nations are consuming more power every year. Nuclear is making a comeback. Natural gas demand is rising globally. Institutional capital is staying in. ExxonMobil, Chevron District Metals, Texas Minerals, Cheniere Energy, Cameco. Fourth, defense and aerospace. Global military budgets are increasing across the US, Europe, and Asia. Governments aren't cutting defense spending, they're expanding it. And defense contracts create predictable revenue streams. Leaders: Lockheed Martin, Northrop Grumman, RCAT and Drone Shield for advanced drone tech, RTX, General Dynamics. Fifth, industrial infrastructure and manufacturing. Governments are reshoring production, rebuilding supply chains, and funding domestic manufacturing. That means construction firms, machinery companies, and engineering giants are seeing long-term order backlogs. Key players: Caterpillar, Deere, United Rentals, Eaton. Sixth, AI infrastructure. Not the hype plays, the backbone. Everyone talks about AI software, but the real profits are flowing to companies building the physical systems that power AI. Chips, servers, cooling systems, and data centers. Smart capital is focused on NVIDIA, AMD, Broadcom, Supermicrocomputer, Vertiv. Here's the pattern you should notice. Capital in 2026 is rotating into sectors tied to real-world demand, national security, infrastructure, and scarce resources. Not hype, not speculation, not narratives, reality. The investors winning this cycle aren't chasing headlines. They're following money flow, supply constraints, and macro policy. If you want to move like smart money, you don't ask what's trending today. You ask one question: where is capital committed for the next 5 years? Because that's where the next wave of gains will come from.